Global markets sank dramatically as Britain voted to leave the European Union, affecting every asset class. Bankers and traders were up all night, anticipating a major shift in the market and currencies. The sterling pound plunged by a record and the euro slid by the most since it was introduced in 1999, as the Leave campaign won the most votes. The London stock market has plunged more than 8%. In the opening minutes of the trade, the FTSE 100 index fell more than 500 points before regaining some ground. Oil fell to about $47 a barrel and industrial metals slumped. The yen surged and gold soared with US, German and Japanese bonds as investors piled into havens. European stocks and US futures tumbled as Asian equities dropped by the most in 5 years.
Also, the markets is taking this very, very negatively, if only for the fact that we've once again in so many years, we've face slammed ourselves into yet another crisis. Markets were very, very bullish yesterday. We saw sterling trade up to almost 150 versus the dollar, 6-month high. And now, gosh, what a difference a day makes. It's shell shock, I think, is what we're dealing with right now.
Well, let's get to you more now on that story. And CCTV's Richard Bestick is joining me live from London. Richard, it has been such a divisive vote and reactions to it have been rather varied. What's the latest on that?
Well, we've seen the reaction of the markets, absolute chaos there. Mark Carney, the Bank of England governor, says the situation is going to be volatile for a number of weeks and months ahead, and he's flooded the market with around $300 billion for the banks, so that liquidity shouldn't be a problem. Would there be a run on the pound? Clearly the stock exchange, the London Stock Exchange, has been hit hard as well, but the big domestic reaction to this comes with the resignation of UK Prime Minister David Cameron, throwing Britain into a political void at the very time when the markets are in turmoil. He says he simply can't run a government when his position to coming out of the European Union is diametrically opposed to that of the people of the country. He's the first casualty, but there are a number of others as well. George Osborne, the Chancellor of the Exchequer, who fought so hard and so vocally throughout the 4-month referendum campaign, he looks as if he would find it difficult to become actually continue in his position. And then comes the question of who to replace these two with, or even with David Cameron. That leadership election already underway. Well, the obvious choice, I suppose, is one of the lead campaign campaigners, and that is the former Mayor of London, Boris Johnson. But I heard Ian Duncan Smith on the phone earlier when asked who he thought might be the next Prime Minister. He said he had no idea whatsoever. And in that place, one final point, in that place, most of the MPs in there are actually pro-EU. So we have a government and a parliament completely out of step with its people.
Well, Richard, just coming back to the markets just for a moment there, and investors are clearly worried. The pound has slid to a 31-year low. What can you tell us about that?
Well, how long is it going to last is the question. All the economic evidence in the run-up to the vote was that there would be severe economic consequences, that there would be a severe shock to the economic system. That has come about. Those who have campaigned to leave say, well, that is something that they always warn of. The markets bet on something, and then ultimately they will settle down and return to what should be a correct level. The problem is, we've never been in this position before. Britain has been a member of the European Union for 40 years. It is the European Union's second largest economy. And the questions aren't about what will happen to the British economy, the level of contraction in the months and years following its exit, but rather Whether there will be a contagion across Europe with other countries demanding a referendum. Remember that Germany and France both have general elections within the next year, and what impact it will have on the structure of the European Union itself. Some here are arguing that Britain leaving is simply the first brick in the wall that could ultimately bring the whole EU project crumbling down.
Well, many, of course, are wondering what will happen, Richard, what will happen to Britain in coming years. But for the moment, though, what can we expect from the United Kingdom in coming days? What are the next steps in that process?
Well, Mark Carney, the Bank of England governor, has been making a statement this morning, a televised statement this morning, in which he was emphasising the strength and liquidity that already exists within the British banking system, that Britain is in a position to fight off the speculators. His problem is that the crash in the pound is greater than from the collapse of Lehman Brothers in the 2007 crisis. It's greater even than the collapse in the pound following Britain's crash out of the European exchange rate mechanism. And at that time, you'll remember, the legendary investor George Soros made $50 billion betting against the Bank of England. That fear that there are still people out there betting against the Bank of England who, like George Soros in 1992, may win is what will keep the Bank of England governor Mark Carney awake at night. So the future is uncertain, but certainly all the economic evidence points to a contraction in the UK economy in the short and longer term of between 3.5 and 5%. The crash in the pound overnight means that everything that people buy in the shops today that has been imported will be costing some 10% more. So an immediate impact of 10% more on people's shopping bills.
Right, Richard Bestick for us there in London.